Hello, everyone. This is Top Down with TCM. We are joined by our special guest, Sean Harper. Sean Harper, could you tell us a little bit more about yourself, just to familiarize people?
Hello, everyone. My name is Sean Harper. I am currently a PM for the President's College portfolio. In addition to that, my responsibility also lie within the consumer discretionary and consumer staples sector in TCM. I guess outside of TCM, some of my professional experience lies kind of most recently in the last 2 years, one at Harvey & Company, which is a buy-side advisory and principal investment firm based out of Newport Beach. And I guess the other one will be Marshall & Stevens, which is a business valuation firm based out of both Los Angeles and New York. So that's just like a little bit about what my experiences were. At those companies, one, I was a business valuation intern, working with some SPACs, some private companies, generally post-acquisition from private equity firms. And then at Harvey & Company, it's more been of origination and sourcing, which is also for private equity firms, generally post-acquisition, looking for both add-on or occasionally platform investments. And most recently, it's been in the consumer segment again, this time within food and beverage and specialty products, such as chemicals or makeup, and I guess kind of like that. Anything kind of surrounding those segments.
Cool. Thanks for the introduction. I'll get started with the first question. So, you said you're in the consumer discretionary sector, and I actually did like a report kind of in the consumer discretionary. It was on Chewy. It's like a pet supply company. And as I was looking into it, it seems like compared to healthcare, it's like way less overvalued in the sense because a lot of multiples are lower. So I guess just in your opinion, like watching consumer discretionary for the last semester, is there like any overvaluation going on in specific subsectors, or how do you feel the sector is valued currently?
I mean, I don't think we can say that the sector is overvalued because it is pretty broad. Because I wouldn't classify something like Las Vegas Sands or Wynn similarly to Amazon. So obviously anything that has kind of a pretty prominent tech segment is probably overvalued, considering after 2020 and kind of their rise in prices. However, I do think there's still opportunity within consumer discretionary. I think there is probably not a lot of upside when you take into like risk adjusted returns, because a lot of the companies that right now that aren't overvalued generally still have a lot of risk. Either they've taken on a lot of debt from the pandemic, usually at kind of pretty high rates, which will affect their long-term growth, or they're in segments which we either have yet to see recovery, like a rebound, or they have failed to or they've lost market share to other players within that industry who do have this kind of technologically advanced, who are more technologically advanced than. A good example you can see of something like this is something like Ross. So Ross is I guess, bargain retail store that usually sells items that have been pretty much cast away from other top line retailers. And so they have no online presence at all. So as you can pretty much make the assumption that during 2020 they got hit really hard, whereas kind of other companies such as say like Nordstrom that does have like kind of their Nordstrom Rack segment, which does compete against Ross. They have a store where you can go online, you can order products, and considering for the last 9 to 10 months people have been I guess people have been uncomfortable going to stores and kind of shopping, particularly in certain areas. Like that's going to be something that is definitely not going to be good for the company long term because they've taken on so much more debt and they have to then pay that off and so on and so forth. And then I guess on the other side, you have companies that have a pretty big foreign, I guess, segment. So for example, if there's a company that takes a lot of their revenues from the UK, or if they take from China, where we'll talk about the UK first, where they're still in a pretty solid shutdown. So they can't they haven't been able to return to relative normalcy that we have here in California and across the United States, where we've kind of just been like, okay, COVID's going to be around for a little bit, so we just have to learn to deal with it instead of kind of tackling the problem. And so I think KFC, for example, they take a lot of their revenues from the UK, and they've definitely been hit pretty hard. So there is still opportunities within it. It just, we need to kind of make the assessment based on risk, whether they're going to be good companies to pull in. I think back in the summer, it was a little bit easier because the multiples were lower, and something like hospitality, like Wynn, or I guess the whole restaurant and hotel features segment. So it was like, okay, we'll go up from here, but we don't. But now that the prices that they're at, say if they were at 70 in August, they might be at 120 now, and it's like, well, is the risk really worth the return that we potentially could get, considering there is heightened risk? I guess that's my opinion as a whole of the industry. Okay. And consumer staples is a whole nother thing, but we won't get into that right now.
Yeah, let's not get into that. Cool. Do you have any questions?
So it sounds like what you're saying was the intended rebound of the in-person retail outlets has caused a lot of investors to pump capital into them, which is causing the stock prices to appreciate. So is your thesis more so that you don't believe that they have much room to grow due to the intended risk?
Yeah. I get where you're coming from. So in consumer retail, it's something that we looked at in the middle of the summer, right? We wrote a report for, I think, TJ Maxx, which has gone up 25, I think almost 30% since we wrote it. And back then we recognized that there was this opportunity to invest in this company because investors weren't as optimistic about investing in something that clearly is going to struggle for the next 6 months, right? From an operational standpoint, maybe not from a stock price standpoint. So they're going to struggle operationally because of like logistical reasons, from supply reasons, from consumer demand. So all these things, and that's why we kind of took a look at it and we go, okay, you know what? This will be something that we buy now, we hold, and in the future will go up once kind of consumer preferences go back to normal and consumer habits, because we made the assumption that generally speaking, consumer habits will return pretty close to normal in the way that they're buying and selling, that people are buying and companies are selling. We think there will be like kind of this massive shift up in 2020 of internet, but our digital purchases, we think that will probably drop in 2021 as people feel like, you know what, let's go to a mall. It's almost like a social event rather than just going out to pick up one item, where we see kind of those one item purchases potentially being much more of a staple of the digital industry. Okay, so to kind of get to the center of your point is that there's this pretty clear line that we think right now of where investors are now much more optimistic about the return to normal. And so they're investing in companies that over the pandemic have been hurt really bad. And so we see these multiples going up and that they're very high in comparison to where they were a couple months ago. And we think that there's still risk of whether the companies or consumers will go back to something like a TJ Maxx, or they'll go back to a Ross that was worth the risk at a lower price. However, now because of the price kind of increases, we don't think it would be as valuable an investment. And considering that we only have this money to allocate, and there is kind of this whole process of getting something through the portfolio that can take weeks or months, that it's like it would be a better use of our time to look into things that we think from the very beginning present a superior risk-adjusted returns.
I feel like the news has passed on this particular subject, but I want to bring it up again because I think it just hit all-time highs again. Bitcoin, okay? Bitcoin, I'm looking at it right now, is at 63,578 for one single Bitcoin. Sean, do you have strong opinions about Bitcoin?
Strong opinions, no. Opinions, yes.
Opinions, yes. Okay. As an investment vehicle, do you think it is viable, in your opinion?
I think there is a place in every portfolio for alternate investments. And I think that's kind of where, when I bought Bitcoin originally, I bought it right after it broke through that 16,000 mark. Because in terms of like technical analysis from things that I was reading and just general charting, I thought that it was something that it took forever to break 16,000. So I was like, okay, I'll buy some at 16,000. I eventually sold it, I think around 48, because I think it's a very speculative asset. So there's nothing that ties Bitcoin to its price, right? And I don't think you can count it as currency, because there's no way that something can be used as a viable currency, or Bitcoin can be used as a viable currency for two reasons. One, it's more volatile than the assets that you're buying it with. So like if you go to buy a Coke for 0.01, hypothetically, right? Let's simplify down. Like 0.01 Bitcoin. It's like the next day that 0.01 Bitcoin, instead of being worth $2, it could be worth $6. And you won't get that with the US currency. So one, there's that problem, because people don't see it as a genuine way to purchase things, because you've had all these stories over the years of people buying like I think someone bought like 50 Cent's album for like a couple thousand Bitcoins. Someone bought pizza for a couple thousand Bitcoins back in the day. And it's like, you don't want to be that guy. I don't think anyone wants to be that person. So no one's really making viable investments with Bitcoin. So that's like one big problem with it. Two is that like it takes so much time and energy to complete one transaction in comparison to like a normal Visa transaction. So there's so much more energy that goes into it that it can't be a real form of payment processing between people in, I guess, like in the terms of like microtransactions between, say if I wanted to send Azaan money after dinner, right, to say he paid for it. It's like, you can't do that, but you can do that with Venmo and you can do that with Visa pretty easily. And so I think the whole energy side of it is something that we're going to need either better computers or better ways to like harness the energy to use. And that's not even to mention like Bitcoin mining, which takes like it's like a whole nother thing. And so I don't think there's going to be a lot of, I guess, I don't think it's going to be the main way that we purchase things in the future. However, I caveat that with it, like Ethereum is like much more of a viable way. That's why like a lot of the other cryptocurrencies are based off Ethereum or like an Ether. And so I think it's definitely, that'll probably be the main one, I think, of the future. And I think that's reflected in this kind of growth over the last year. I think it's up more than Bitcoin is in terms of percent. And I just think that the US government or any major government is not going to let billions and billions or hundreds of billions of dollars get traded every day without their control over it. Like, I think there's going to be regulations that get put onto cryptocurrencies in a pretty significant way, because governments are going to be like, yeah, let's freely go spend $20 billion on something and I don't care what about any of it. It's like, no, government's going to want to know like sales tax. They're going to want to have their taxes based on the asset. So, and on top of just knowing what you're buying, like I think there's going to eventually be some sort of regulation that is tied to it. When will that be? I don't know. Like, I think that with the United States kind of Congress's hate right now towards like tech companies could eventually tie into something else that's connected to tech of like, we don't have control here, so we're going to regulate it. And once it faces regulation, then I think that it will tank, because people are going to be like, it's just going to be another form of currency at that point. So the volatility will be gone. A lot of other things I think will disappear from Bitcoin as an asset, which will be reflected in how it moves speculatively.
So
I guess that's, go ahead.
I really like that answer.
So it sounds like you believe that Bitcoin's not going to be used like an actual currency, but could you see it being used more as like a reserve asset, like similar to gold or the US dollar for other currencies like globally?
Yeah, I can see it definitely being used as like as an asset. That's the same way that something like Tesla's holding it. Tesla's holding it more as more of an asset rather than a currency, or like a short-term investment maybe. And so I think that I think cryptocurrency will eventually be the backbone of kind of the way that we move money. It just depends on what is the coin that'll get us there. And I think Bitcoin kind of has this, it's kind of like Clorox, right? It's like Clorox is the brand and isn't necessarily the product, whereas people have equated like Bitcoin and cryptocurrency. So because it was first, or not first, but like one of the first, it like is very, it has that tie to people's minds by being the biggest. But I think it will end up being something similar to like MySpace and Facebook, where Bitcoin's kind of like MySpace, but eventually MySpace gets taken over by Facebook in the same way I think will happen between Bitcoin and something else, which is one, it has to be more efficient and potentially have less problems with like security, potentially be some form of way that they could regulate it and like effectively. I think whatever cryptocurrency can do that will be the Facebook of cryptocurrencies. But I definitely think there is a place for it in the world.
Okay.
Cool.
My question is, if it tanks, and I think you said it will tank once this regulation starts happening and it is a speculative investment, if it becomes a currency, it'll probably stabilize. What is the value of it, you think, in terms of US dollars? When will it plateau?
That's a hard question.
I don't think it's like Bitcoin could go up to $250,000 and then tank back down to 60, and I think it would still be reasonable because there's very few companies that have invested in cryptocurrency. So if it becomes almost a standard for companies to have this sort of digital currency, it could go up. It could go up and up and up. But like, there's no limit on it. It's not because there's a finite amount. I think there will always be. I think it will stay at a pretty high price because there will always be demand for it. Because again, it's like it is the most well known, and there's kind of this whole like cult following behind Bitcoin, which I think is super important for investing, especially in speculative assets, as we've seen with GameStop. It's like once there's kind of a cult of people who really believe in something, it really can never fail that bad, I feel like. But again, I don't know which price it will fall to. I think that's the hardest thing about Bitcoin and why it's so speculative is because you can't value it because it's not tied to anything. It doesn't really mean anything. It's just it's just a form of currency that can't be tracked, can't be traced, and no one knows what you're buying with it. So I think the privacy behind it is something that's very interesting that will keep it relatively high.
Cool. Okay. I kind of want to ask you. You said a little bit earlier when answering this question that like everyone should have alternate forms of investment besides like equities, I assume. So do you have any, or do you find any alternate investment assets like interesting? Like maybe like I don't know, like cryptocurrencies, bonds, I don't know, penny stocks, anything.
By alternate investments, I meant like outside of bonds and equities.
Oh, okay.
I think there is. I think generally speaking, there's like you should have like 5% in alternate assets or alternate investments. Like that can mean like private equity. It can mean like venture capital. It could mean private equity, venture capital, cryptocurrencies. I think like apps. There's some apps now that start to do where you can like lend people money. It'd be something like that where you get like kind of an interest on the back end. There's hundreds. Like there's all these different forms of investments outside of just bonds and equities that I think. I mean, I don't think you should have too much exposure to them because they're speculative. But I think having them in the portfolio or in a portfolio is definitely something that's important, and I think that's reflected in like most like endowment funds, for example, for schools. Maybe I'm not sure about Cal State Fullerton, right? But some like actually a better example would be like pension funds for like CalPERS, for example, which is the California Pension Fund or whatever. It's like for California's public employees. It's like they have a pretty sizable amount of their cash invested into equities and in bonds, but then they also have it in private equity. They have it in venture capital. And so I'm not sure if they have it in cryptocurrency, but I know for sure they have it in those two. So it's kind of like they have chosen kind of there's bonds and equities and you kind of balance out the risk there. But then also if you're investing in private equity and venture capital, well, private equity private equity, you're investing in private companies that hopefully have some unrealized value that private equity firms will realize, and you kind of get that gain. And then for venture capital, you're investing in the future of hopefully one of these companies that you're investing in. Hopefully your hit rate of like 1 in 50 goes on and becomes something of some sort of value that you can invest in. And I think there is a place to that, because I think it does help maybe not minimize risk, but diversify your risk, which is important.
Okay, so I guess additional question to add on to your answer. So for the everyday investor, like we can't really invest in private equity or venture like capital. Like what do you recommend someone like me or you invest
in?
Dogecoin.
I would say that cryptocurrency right now is a small portion of a portfolio. Like around 5 or less % is something that is going to be one I think will give you good returns in the long term. But I think that it also there's this whole other wave of investing that's going on, right? Really, in the last 100 years, there's been no new additions to investing. There's been bonds, there's been equities, and recently there's cryptocurrencies and like NFTs and that sort of stuff. It's like you can invest in NFTs, but like I think cryptocurrency over the last 10 years or maybe 14-ish years has become this whole other investment side that you can invest in. And I think that's something that potentially, even if you're not too familiar with, it's something that once you invest money in, you'll get familiar, because you're not going to just invest something in something that you don't like. So I think it's something that would be important for, I think, all young people, or pretty much everyone, to have invested in. I mean, you could definitely pick out ones that are potentially less volatile, but I think there's ones that are tied to other asset classes, and so I think you could do that, or maybe invest in. I don't think there's any ETFs that track Bitcoin, but I know there's talks of that happening. I think that would be something that people will invest in, or investing in stocks that potentially have a pretty high correlation to cryptocurrency would also be something. But also, is like, I think you need to divvy those stocks up away from the rest of your equities portfolio.
Yeah.
Because you need to have like 5% away in just like very speculative assets. Just because I think it keeps you on your toes and keeps you having to think about the future critically, and which companies and which ideas will be viable. So I guess that's it. I would probably say to get down, I would say cryptocurrencies, anything tied to cryptocurrencies. And there's also like apps where you can like give out, like you can like lend out money. And I think those 3 for like young people will be like kind of the big things they should be invested in.
Cool. Okay. I have like one more question that's not related, but if you have any other questions, then you guys can go for it.
Shoot it.
Jason? No? Okay. Okay, my last question, and maybe one of the last questions we asked today, because we don't want to hold you for too long, is so you have 2 internships right now and are going to school full time, I think. And we also did like the IRC competition. So you're a very busy man. Do you have any time management skills that like can help any viewers, or any like stories that like taught you, I really need to get better at time management?
Very good question. I actually just ended my 2nd internship, so now I only have 1. So now I'm going close to full time at one of them. But what I would say is that I think we all realize that we have a lot more time in a day than like what we think we have. I think once you kind of plan everything out from start to finish, and you get a few things done, like at the start of your day, you go, wow, like I've done a lot today. And I think for me personally, I get a pretty big sense of gratitude, or maybe not gratitude, self-fulfillment, I guess, from that, which is something that I think is super important to like want to keep up like my self-esteem and kind of get to the goals that I'm driving towards. I think in terms of time management skills and what I would recommend, I use Notion, which is like I guess like a desktop app, as well as like I guess phone app, and that you can do a lot of like tracking. You can put like a lot of your things kind of in the same place, so there's less kind of brain fatigue from transferring over between like Teams to Outlook to like a Word doc to Excel. Like I kind of throw everything in kind of the same spot that it kind of helps me keep my mind focused. I don't know. I just don't. I just kind of. I think it's one of these things where if you just kind of do and don't think about it, it's a lot easier than if you go, wow, like I'm so overwhelmed with so much that I'm doing right now. I actually am overwhelmed.
Yeah.
I think something one of these things where if I don't think about it and I just kind of plan everything and be diligent with my planning, I think it's probably the best thing to do, because once I think about it, I do get stressed out, but I just try not to think about it. I just try to keep planning, keep like doing what I need to do. And kind of, I think also another side of this is like setting away time for, like if you have friends or if you have family, or significant others, like setting away like time to be like, okay, I'm going to hang out with them this weekend, or I'm going to hang out with them this night, or so on and so forth, right? And taking time out of your day to spend time with your friends and family, because I think if you don't, then it's just like the worst thing ever. I think being stuck at your desk for 16 hours or 15 hours a day is bad, but until you have to like do that every day without even seeing like your friends or family is like the worst. I think like everyone can find time to, like no matter how busy you are, you can find some time to like spend with your friends and family. And also the IRC just sucked. But also like if we're gonna admit to like real things, like the IRC was very intensive, but I think a lot of the work actually got put onto Azaan and Keiichi. Not all of it. Like we all did our own parts, but like if we're gonna be real, like I'll be real. It's like I had my part, which in the paper was like I think it was about 2 pages. Azaan, or like a lot of other people, I think a lot of the like segments like really weren't that much. I mean, I didn't feel like mine was that much work, and I know that Azaan did, like, and Keiichi both did a lot of work. Keiichi with like a lot of formatting and writing, and Azaan with formatting and writing. Or I think maybe primarily more writing. Keiichi took a lot of the formatting, but like a lot of the work actually got put onto them. And I feel like as much work as it was, kind of like checking in every night, I think they definitely took the brunt of the actual work that we were doing. I feel like personally, anyways.
Giving credit where credit is due.
Thank you.
It definitely, it's definitely due for Azaan and Keiichi, because they killed it.
Right, so we are
and Edgar and Vanessa. They all killed it. But I think Azaan and Keiichi really dug into the trenches to get that done. So
no doubt.
Did.
I'm sure everyone contributed, a fair amount to the IRC. For those who don't know that what IRC even is, it is an investment research competition for schools in SoCal, and all the schools did one company, and Sean and Azaan Barlas, they were on one team and they actually won first place. So beating schools like UCLA and Pepperdine? Yeah.
UCLA, USC, Pepperdine, Loyola, Cal State Northridge. I think there was 2 teams from UCLA.
Yeah, USC.
I think something like that. And
Claremont.
A lot of them,
Claremont.
I think Claremont was there, I think, maybe.
Just keep naming them.
I know that a lot of the students at other schools were like master's students, or they were MBAs. So that like it felt really gratifying. And I think that I would say that even though like I'm saying that Azaan and Keiichi did a lot, it's like I think that every single member in our team, like even though we did it in different varying degrees, like I think that even like me, for example, I feel like we put in more work than like any other school put in work. Like the second or outside of Cal State Fullerton, I think like we did much more work than any other school, and I would fight to the death to say that, because that was a lot of time over break, and that I don't think a lot of schools invested that much time. But I mean, they all did a good job, but I just don't. I think we had that little edge because of the amount of time that we put in.
Yeah.
100%.
Hats off to you guys for representing, Cal State Fullerton, putting us on the map, if you will.
Thank you.
All right, so we are running down on time. I just want to thank you so much, Sean, for being here. You were an amazing guest. Thank you for answering our questions. I am your host, Jason Cruz, Azaan Barlas, and Weston Weinberg. We will see you on the next episode of TCM.